So what do we want to look at today? Well, first things first, got to check over here. It, of course, is a Monday. All right. And you know what that means. That means we're going to go over to TFNN.com. And I am going to pull up my program on the left-hand screen here. How about that? We're going to move over right now to the newsletters tab. You're going to see right here, top right, Mastering Probability newsletter by Steve Rhodes. Of course, we have Steve on every Monday. He has the Trader's Edge at 11 a.m. Eastern Time right here on TFNN. If you have not checked that out, I strongly recommend doing so. And I recommend checking out Mastering Probability. It's very thorough. He goes over quite a bit of things. And of course, we really enjoy him coming on and sharing in his analysis, because I think he looks at some kind of unique ratios and relationships between currency pairs or currencies and let's say the SPX or certain indices that really give us kind of a unique insight into kind of what's going on not just a small scale but on a larger scale as well. Steve, how are you doing?
Hey Jacob, I'm doing great. Yourself?
Doing very well. Weekend was pretty good. A little bit cool out today, so enjoying the beginning of the week.
Yeah, well, the only thing that's important today is 7 p.m. and the Lightning versus the Panthers.
That's right.
Right? All this other stuff doesn't matter.
Yeah.
But hey, look, the Lightning had a nice game on Saturday. So tighten up the series. So tonight's game, I should say, is going to be really important out there.
Absolutely.
But, I think we should have my chart up on the screen here, which is the New York Stock Exchange chart. I believe that we were taking a look at this last week. And so I just wanted to kind of update you and everybody on this set of tools out here. So the top portion of the screen is the New York Stock Exchange. Right below that is the actual advanced decline line, and below that is the advanced decline oscillator. The advanced decline oscillator takes the advanced decline line and it looks at the difference between the 39 and 19 period exponential moving average. That creates the oscillator. So a number of different things transpired last week, especially on Friday. The first thing is the advanced decline oscillator has moved into the overbought condition. Mm-hmm. It does that when the advanced decline oscillator gets above the plus 150 level. You can see even right now we're at 187.46. Cool thing about this, so the overbought condition has to be worked off. We'll talk about that when we come back from the break. But the more important thing is when we get above plus 150, it tells us we have higher prices to come. Oh. Not necessarily tomorrow, not necessarily the next day, but maybe weeks or months from now. So I don't think the rally to the upside is over by any stretch of the imagination.
Perfect. Steve, please stay right there, folks. We'll be right back with Steve Rhodes after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're joined right now by Steve Rhodes of Mastering Probability. You can check out his newsletter, Mastering Probability, at tfnn.com/collections/trading. Steve, before we went to the break, taking a look at the some charts for the New York Stock Exchange, the advanced decline oscillator. What do you see in that?
Yeah, again, an important point to make, and people can generate this chart on their typically on their screens. But when we get above the plus 150 reading, it tells us about future higher prices out there. And somebody can go back, they can take a look at it, they can pinpoint those dates, that data, and they can see that it happens it's the most consistent pattern that I've seen out there. Not saying we're going to new all-time highs, but and when I say the rally isn't over, I'm just saying that in the future weeks, months ahead, we should see higher prices inside the New York Stock Exchange. Now, there's two different ways that an overbought condition tends to get worked off. The first way is the one on the very left-hand side, where we've got this left rectangle out here. And the top portion shows price, the bottom portion shows the advanced decline oscillator. And so where my cursor's at right now, you can see that was the high, which was July 16th on a closing basis inside the New York Stock Exchange, as it was with regard to the advanced decline oscillator reading, which was up at about the 238 level. So it got into that extreme overbought condition. How price worked its way off is it basically started moving lower until it went ahead and bottomed back in the early August time frame. But if we take a look at today's price action, we'll see right now that the New York Stock Exchange has actually ticked to the upside with the oscillator moving to the downside. And that really suggests that it perhaps, right now, the clue is that it might be the type of top that creates a divergence. And the divergence would be prices moving higher, but the advanced decline oscillator is moving lower. Eventually, that will lead to some type of correction out there. So that's the first thing. And that took place on Friday. We're getting follow through today. There's another thing that took place on actually, I think it was Wednesday of last week inside the New York Stock Exchange. And it was a trading session actually of, let's see, today's Monday, Friday, Thursday, Wednesday. On Wednesday, I didn't even notice this. But if we take this is the daily time frame chart for the New York Stock Exchange. Yeah. And what it did on Wednesday is it triggered an A to B equals CD pattern to the upside. I'm going to turn these trend lines off just for a moment. We'll come back to those. But here, if we could take a look at the B point of this A to B equals CD was the high from April the 15th. Now, I don't have volume out here for this index, but we closed just above 18,604.06 last Wednesday, April 23rd. And that triggers an A to B equals CD pattern to the upside. And that suggests that what the New York Stock Exchange wants to do is move up towards the 19,641-ish type level, or really get back into the highs from March 25th out there. So we've got that pattern to take a look at. There's another pattern that I look at inside of the New York Stock Exchange, really with the S&P 500. But I'm sorry, it's really the S&P 500 that I take a look at. But it all kind of encompasses, and that is, we spoke about last week, we spoke about the VIX being in contango. Yes. And what contango is when the current future contract is trading trading above all forward future contracts. What that is a signal of, that's a signal of like a screaming Mimi baby, a whining baby out there. It's very short term, and that's really what I mean by that. Now, what I have on the bottom panel of my charts out here is I have the comparison to the ratio between the VIX and its 3-month counterpart, its 6-month counterpart, and its 1-year counterpart. When those ratios go above zero, which they had been above zero for several weeks out there, that sets up that contango pattern. Now, what's really cool about this is this is not how you would catch a bottom. All right, because this is typically it's not how you catch a bottom. But what you're looking for are confirming signals. There are a number of people, in fact, newsletter subscribers went long based upon this and other TD9 count patterns that we saw inside the indices for their daily or weekly timeframes out here. But this on Friday went ahead and triggered the bottom signal for the 6-month and the 3-month time frame. Right now, today, at this very moment, which is great doing the show live out here, is we've ticked just below 1 on the 1-year ratio of this. So if we do close below that, this has given us a signal of at least a bottom that was out there. But I want to go back quickly just to the New York Stock Exchange and throw one. So we've got an A to B equals CD pattern to the upside. But what price is going to have to deal with here is going to have to do with trend lines. So you can see that right now we're already dealing with a couple different trend lines that we have out here. So we've got a trend line that basically is coming from the high of March 26, and that's taking a look at the high from April 3rd, and that's a trend line that we're running into. Is this the end of the move? I don't think so, but we are in an overbought condition. So to suggest that the New York Stock Exchange could pull back, that would be normal. But again, we looked at right now that price might, the pattern might be that price in New York Stock Exchange is going to drift higher with the advanced client oscillator moving lower out there. So there is some trend line resistance, but that does not mean that we have hit a top. In fact, if I go back out here, take a look at one of the sectors inside the S&P 500. It's the XLB. It's the materials sector. Mm-hmm. And what the XLB did on Friday, and there's very few of them, it actually confirmed an A to B equals CD pattern to the upside, and it did it with volume. The B point on this pattern would be the high from April 15th. We took a look at April 15th, I believe, on the New York Stock Exchange, and there was 4 million shares that traded hands that day. Last Thursday, price closed above it with 5 million shares. So inside the S&P 500, the building materials sector, the XLB, has a confirmed A to B equals CD pattern to the upside. We'll give you its initial price projection here momentarily. It's 87.55. Now, I think that more likely than not, the XLB will do more than a 1-to-1 move to the upside. And the reason I say that is its retracement was only a 0.382 retracement. It was actually just shy of that. It was 36% out there. And typically when you do a retracement that's less than 0.618, you'll do more than a 1-to-1 A to B equals CD pattern to the upside. Now, that's what the daily signal is telling us. The weekly says none of that is going to take place until price gets back inside its profile. And the bottom of that profile is 83.19. So for those people that might be inside the XLB, things look pretty promising right now, but price still has to take out resistance. This is the reason that I like to take a look at a daily and a weekly and a monthly time frame chart together, just to give us the bigger picture. So there is resistance, but if we start seeing a close above 83.19, Jacob, that says the XLB wants to make an A to B equals CD to the upside, and we want to watch, other symbols, other instruments. I don't see much in the way of the Mag 7, with one exception. Perhaps one of the most successful stocks out here, and you already know this, I'm sure, but I'm going to put this up on the screen, is Netflix.
Yes.
This is my set of charts here, Jacob, that take a look at. Now I've added a daily time frame. So the other chart we were just looking at, we're looking at monthly, weekly, and daily. The reason I wanted to put the yearly chart out here was because when you start trading above prior year high out there, you're in a bullish breakout mode. I mean, those are stocks you're really looking for, to the extent that you yourself are in a bullish mode. Now I can see that this is also going to be bar number 9 of a TD9 count. That says there could be a top this year or next year out there. Well, how are we going to know? We're going to know by taking a look at what goes on the monthly, the weekly, and the daily time frame. The monthly time frame, because of last week's move, has now triggered bar number 9 of a TD9 count. That says that Netflix should form some type of short to intermediate term top between this week and next week. I'm sorry, this month and next month. Sorry about that. Didn't mean to. I want to make sure I got that clear. This weekend, this month, and next month. When I look at a weekly time frame chart, and this is pretty cool. The weekly time frame chart for Netflix, its B point was Valentine's week, February 14th, and the volume there, 16 million shares. Guess what we did last week? 35 million shares. We took out its swing point with big volume. Netflix got higher to go, but you probably already did that.
It is an unbelievable equity compared to everything else. Steve, thank you so much for coming on. We'll see you tomorrow at 11 a.m.
You bet. Take care, Jacob.
Take care, Steve.